Hey guys, Mike here. So I got another jam-packed video for you, and in this one we're going to be talking about Apple and NVDA and the battle of the market caps that keep going back and forth and why that's important when it comes to, remember, the ETF XLK. I got some more answers for you to answer your questions on that one. And then we'll go into a few other stocks for sure, but I'm going to start off asking you a question right out of the gate, right? So if you had $10,000 to invest and it was 2013, right? I'm gonna give you your choices. Ready? And pause this after I give you the choices and put in the comments. Would you choose Google, Microsoft, Apple, Meta, or Domino's Pizza to invest that $10,000? So pause it, put your hands in the bottom, come back. So now that you're back, here we go. This was stunning to me, and it was educational for me because I tend to be tech heavy. And when you look at this, you would have been much better off choosing Domino's Pizza. You can see right there what the gains are. I mean, it's absolutely crazy. The reason why I chose 2013 is when Meta became public. And you can see, what was that, 1,812% return. Microsoft's 1,007, Meta's 1,524, Google's 1,136, and Apple. So, I mean, that's crazy. And let's throw Wing in here just for the heck of it. And you can see this one became public in 2015, I believe, and it's outdone them all. Look at that. I mean, doubled Apple, tripled Google, even crushed Domino's. Like, as you move this around, you know, you see how the last like 2022 crash, that Meta, Wing's number 2, right? Domino Pizza's number 4. I mean, that's amazing. And the reason why, this is why I learned, I definitely learned something. When these companies come public, for whatever reason, all you got to do is look how many shares outstanding. Look at Wing, 28 million. I mean, the float is minute, for crying out loud. Absolutely minute. And of course, what does that mean? That means usually if the stock market goes down, this thing's going to get hammered, right? Like 60% there in 2020. I think it was almost 60% in 2022. But boy, coming out, because it's such a low float stock, don't take much to move this, right? Look at that. That is unbelievable. You know, you look at Domino's, you got to get them where they hadn't been around like crazy amounts of years like Domino's, because the gains do fade. Look at this one, 34 million shares. And this trade on the S&P 500. Amazing. And so I've definitely learned to look for these stocks. This was Chipotle, I think I said it right that time. Same thing, it was a low float stock, and that's why it's been able to get up to over $1,000 and stuff. I didn't put it on here. But watch out for when these stocks come public. And they do have growth, a lot of growth behind them. But it's that float that really makes it where they can move like this, okay? And that's the upside and the downside, so be warned. Now, you can see what's been going on in the market here as far as like rotation. We'll go over just the last 5 days. Obviously, you know, big tech had its week right there once again. Very heavy. Communications got, you know, just nuked basically. Not good at all. You go to the stuff we have to buy, the consumer staples. That didn't even look good, to be honest with you. We don't expect much out of real estate, that's for sure. You look at healthcare, you know, I mean, everything just either going sideways or down, basically. Cyber security right here, you know, utilities, financials just look like a hot mess, the small ones and the larger ones. Stocks, you can see, everything's rotating. I mean, it's all about the semiconductors, right? Biotechnology, get out of here. Energy, boy, look at that. Just straight down. Man, that's a mess. Stuff we don't need actually held up way better because a lot of those stocks, remember, Bounce, that was coming into major support. They reported earnings last week and the week before, so those aren't as bad. Again, a lot of other stuff just looks like a mess. Jets, travel, oh, those are way down for the week, especially after FOMC, that's for sure. But when you look, you know, and look at the new highs, you know, these record closing highs we did last week, you know, you got tech, NVIDIA, Microsoft, Broadcom had an unbelievable day. But there are other sectors as well and other stocks. You scroll down here and you'll see, you know, restaurants, which is Chipotle, right? TJX, Costco, right? So these are shopping. These really are consumer dependent. And so these keep going up. These basically are Wall Street's darlings, right? That's what they're putting the money into. That's why it keeps driving them up. Now, the battle we talked about with the market caps, it keeps going back and forth between Apple and NVIDIA. I talked about how Apple's acting out of character with those 2 God candles and just crazy move that it had. And it has surpassed Microsoft and Apple. Then all of a sudden, Microsoft broke up to an all-time new high. But the reason why this is going to be important, more or less in the short term, is because of XLK. And so on June 21st, I believe is what the date I have on this, they got to, you know, basically do their re-weights and all this stuff and restructuring. as they usually do every year. And you can see what they are is they're a market cap weighted index ETF. This means that each security in the fund is weighted based on market capitalization. That's the market cap. For example, as of June 14th, Microsoft Fund's top holding with a weighting of over 22.5%, while Apple and NVDA were also major holdings with weightings of 21%, and then it drops all the way down to 5.86% for NVIDIA. If NVIDIA were to surpass Apple in market cap, its weighting could increase to over 20%, while Apple's could drop to as low as 4.5%. And so hopefully you get that. So it's the race on market cap, right? Depending on who's going to get it. And I even read the reason why. I mean, think about the run up NVIDIA's had. I mean, it's been incredible. Yet the market cap in the XOK has gone from 4.5 to 5.7. So I even read they can't have more than 2 stocks that are over, that reach 6% or higher. They only have 2, and that's why you see that big jump. And so if supposedly the way it's supposed to work, if NVIDIA eclipses Apple on, I think it's June 21st, the date I got on it, let me know if you have something different, then all of a sudden they're going to have to sell a boatload of Apple to get it down, right, to that 4-point-some% or less than 5, and then buy a boatload of NVIDIA, which could push it up even farther to get up to a 20% weighting. So that's the big battle right here. And you're talking, anywhere from people estimate from 10 billion to 15 billion worth of stock, which, that's not chump change, right, when you're buying a stock. So, again, that would be bullish for NVIDIA, not very bullish for Apple, of course, in the short term, right? It's not going to, over the long term, probably not affect it all that greatly. But again, I don't know. I haven't looked at to see if there's even any other kind of like market cap weighted ETFs like this, because NVIDIA hadn't been up there to Apple and Microsoft. We didn't have to worry about it, right? Nobody was challenging them. And now all of a sudden somebody is. So I'm going to look into that. Let me know if you know of any more to where you could see that shift happen, right? Because that would be a big deal if you have multiple ETFs doing that and flipping them like that. So we'll see how it goes on that one. Now, when it comes to Apple, obviously we know we came up finally, hit that magic 220, started consolidating down right there. It got around 212. It's actually holding up, pretty dang good because people are still obviously buying more than selling, but it did get a golden cross. That's what I'm going to tell you about Apple, and it rarely gets one of these, okay? The last time we saw it was after the 2022 crash, March 2023. Obviously, it went on a big run. We keep scrolling over. You have to go way back, right? Because it didn't even get one in 2020 right there. It didn't come all the way down, right? You come down here, you have to go all the way back to 2019 where it got one. And initially you had the dip, but then you had a nice run right there. Then you go back a couple more years to 2016. And so it doesn't happen a lot. Then 2013. So again, not a whole lot. What is that, 4 in the last 11 years? And you had big runs after that, okay? So keep an eye on that. Now, Tesla, this has to be the largest, longest symmetrical triangle, if you like to call it that, I think I've ever seen. And I don't think it can keep wedging all the way into 2025, by the way. But that is crazy when you look at that one right there. And when you come over, again, all it's doing, I'll make it quick and short. That year-to-date anchor VWAP, the thing has only closed above it twice now, and it still failed to hold, right? It was still just in this pattern, in this area between like 172, 187, right? Still waiting. It was sell the news event once his package got approved and stuff. Shocker there. And again, what was NVIDIA doing while it was going down? NVIDIA was going up once again. And so this one just continues to get kind of compressed, right? So eventually, you're going to have the explosive moves. You got the trend line up there as well, if it ever breaks out of that. And you just have so many anchored VWAPs and moving averages in play just trying to press this thing down. So eventually, there's going to be a big move. We just got to see what it is. Again, a lot of people are thinking this stock is not going to have a big move because until they start to cut rates, are people really buying that many cars, right? It's a really drag on them. And again, that move back up before was not fundamental on how earnings will be looking in the next quarter or two. So that's what you got to make up your mind, and when you're buying this one. Now, when it comes to like Disney, for example, you can see that 50 rolling over, crossing that 100. It's sitting there kind of consolidating in this area right here, which has been a decent balance area for it in the past. But the 200 is right down there below around like 96, 97 right there. More of a discount range, more dug into that area because it's a decent area from 95 to like 100 of support right there. And you can see the 200, going back to 2023, 2024, it did bounce a few times. That could be good support. This is another one, though. It's like, could the earnings be that great, right? Look what we're coming to. Is that many people going to Disney? I don't know. I don't go to Disney. So let me know if you've been down there and it's still just super packed out and you can't get in and all that good stuff. But just watch that one because, man, that 50, boy, look at that angle right there. But the 200 is still heading up. The 100 is still heading up. So as long as that 50 don't cross the 200, you know, you're still in good shape. But just watch that area. It could just like meander out in that area for quite a while. Now shop, again, finally, when I said we had 12 straight days, we did get one red day and then a huge pop. What happened was it got a price upgrade, I believe to like 75 or something like that. And so that was a good thing for it. And again, it's a fast mover. So it did get above the 50, but watch the 200. 200 is right up there. Put you in a discount area between 68.75 and 69.86. It is definitely resistance, right? For sure. And, you know, me personally, what I would love to see is it actually, you know, because again, it's in this gap, and usually you'll get about 50% of the gap filled, and you can see a pullback that normally does happen. There's no rule of that or anything. You just see it happen a lot. But what I would love to see is it come back down, and let me get my little drawing tool out and I'll actually show you. But come back down and test this area right here where it gapped down to, and you know, bounce from there. Like that will be, you know, awesome to see, because that's been just a big move up with no real pullback. Test this area, move up, probably get, you know, rejected right there, then come back down, kind of like one of these patterns, right? I mean, if you look how it moves, up, down, right, boom, in waves. And that would just at least give it some support. It'd be a much more fundamental move for sure, much more structural move. And again, we're sitting right here, right? We're finna get faked out again. Here's this MACD trying to cross the 0 line. Last time it tried it, boom. Before that, we had talked about that. I was like, don't try to front run. You got to make sure you get over the 0 so you don't get faked out. And what happened? It got smashed down. So this is, you know, that timely thing where this has to push through, and it's happened to be coming up when what? You're starting to hit resistance, right? So let's see if we get a third time this thing getting rejected. Because you can see when it moves over the 0, especially with momentum, it can move, right? So again, this is another one to make out. And so, you know, looking at Uber, you know, this one right here, third rejection right there, off this trend line. It's kind of just sitting there waiting to try to explode up. The MACD is trying to come across that 0 line. It's hanging on that 50 right there. And so again, when you look at it, I mean, this has been a very big mover, but obviously we could come back down. Do we get another retest, a third, fourth retest right here at this area around 64? Or do we finally maybe hit the 50 and finally break through to explode higher? Pan W is another one sitting there just waiting to break out. Honestly, it's just sitting there riding the 200, then it jumped to the 50. It's riding the 50, keeps banging its head on this trend line. And so again, this usually breaks to the upside. So we'll see if we finally get explosive move to the upside and fill this gap right here, which would be about 12%. And that's all-time highs right there, by the way, in that area. And cybersecurity, I mean, been doing pretty decent. At least a few names have. And so watch that one very closely. Again, if it does move back down, it'll probably either hit that trend line right there or the 50 moving average. But it's been, you know, a slow grinder to say the least. Now, when you look at the indexes, obviously SPY right here, it's just sitting there. It's not like the Qs, right? I mean, this thing cannot get above that midline of that channel right there. You know, maybe we get some move down this trend line right here where it starts forming like a bullish flag maybe before the next move up. And so, you know, when you look at it, 5,500 is where a lot of people are looking for a market top. And when you look at that, I mean, that's like nowhere. It's like 1.14% away or something. Then you got people like, oh, no, we're going to 6,000. Like, where's 6,000 on this thing? We got to pull it way down right here. Like 6,000 by year end, by the way. And so year end, if it gets that one, you're talking about 10% for the rest of the year. I don't mean you're going to have pullbacks, but in the mean front, before you get a decent pullback, they're saying 5,500. So watch, you know, 55, 50, somewhere in there. So a lot of people say before you start heading down to the bottom of the channel right there and maybe breaking back down. So watch that one. But then, of course, I mean, you can look over here and you can see a clear divergence right here, right? Because the Qs are in charge, not SPY. And there's SPY right there, S&P 500, clearly moving, you know, up, sideways, all that good stuff, moving up. And then there's the RSP, the equal weighted SPY, where the other stocks are like, eh. And that's why you see the breadth and the stocks above the 50 moving average and the stocks above the 200. Just doesn't look that great, really. And the question is RSP forming a downward trending channel, right? Or because you see it did not set a lower low on Friday. It stopped right there, right? It did not set a lower low. Remember, this is like a show, right? We got to leave a cliffhanger and stuff. Because if it starts setting lower lows, lower highs, then obviously that means your breath ain't coming back in for a while. And so you're going to have like 10 to 15 stocks try to like pull this whole thing up, even though, of course, the Qs are the ones just going, seem like parabolic and can't be stopped. They just keep setting new highs like every day. So watch for that. And then, of course, with earnings starting to dwindle down, you're going to have your home builders on Monday, home builder on Tuesday, Nothing to worry about on Wednesday. You'll have like Aurora, Kroger, Darden, Jabil reporting. And then, of course, on Friday, you have to worry about maybe like CarMax. When you look at cars, I can't imagine they're selling that many cars, but maybe I'll be surprised. Economic news as far as red folder, you'll have pretty much some almost every day here. So Empire State Manufacturing Index, which we expect to be hot garbage. Tuesday, core retail sales. Retail, this is definitely going to be a big one. This will move markets for sure, right? Are we still spending? Okay, Wednesday, nothing to worry about. Thursday, you have unemployment claims. We'll see if those are still coming in higher than expected or less than expected. You have more manufacturing stuff, which the market don't seem to care about. And then Friday, you have flash manufacturing PMI and flash services PMI, but much less than last week, which was a super volatile week. Again, the Qs, the way it's moving up, at some point in time, the move has to be digested. It always gets digested, right? So NVIDIA, you see it's pushing up a lot slower. So at some point in time, you would think it's going to consolidate, right? Apple's had its gigantic move. It's trying to consolidate now. You see Netflix trying to break out. And so, we'll see if all those stocks at the same time, or even 5 of the 7 or 8, however many it is now, start to consolidate sideways. Not even go down, just consolidate sideways. You either got to see the rest of the market pull up, the breadth increase, or, we're going to get a sideways market, maybe slightly down, that kind of thing. So that's just what we got to wait and see and stuff. And I'll go over a whole bunch of stuff tomorrow when it comes to consumer sentiment and all that good stuff. And of course, the fear ingredient index, I get questions all the time, because we're literally sitting in fear, but we're setting at all-time highs, right? And a lot of people don't realize what that's made up of. But I'm actually going to do research, and I'll put a members video out first on it, and then I'll bring it to you guys later on or something and talk about that, why it's looking that way and stuff. So they get a lot of questions about that one. But anyway, hope you guys got something out of it. Please hit that like and subscribe button. Really appreciate it, guys. Feel free to sign up for the membership right there, and you'll be the first to see that video. I do 2 a week, by the way, and a morning news brief every Monday through Friday. So have a good one, and I'll see you tomorrow.